There are a couple ways how to invest into these companies. So one way is going directly buying the shares in the company so that you're sitting in the cap table, you're one of the shareholders. And the other option is to buy shares in an SPV, or so-called special purpose vehicle, which is dedicated investment vehicle that is buying shares from the underlying company. And I guess the last one, which is the most indirect, and I'm curious to hear your take on this, is the second layer SPV, which would be an SPV sitting on an SPV that is in a cap table. So this is basically the ways how a family office can buy those shares. Why would you buy an SPV? Is there some companies you kind of have to buy SPV? Is there some situations where you're happy to do second layer? Like what's the difference of those for a family office?
Yeah, a great question. I think all things remaining equal, investors will always love to be on the cap table. When you would choose an SPV or when you would choose a different structure or multi-layer structure is really by necessity as well as by opportunity. Well, if we're talking about how individual investors can get involved, an individual investor, perhaps they're investing $100,000 or $250,000, they are simply, generally speaking, not going to get the access to the company's cap table because the company's own primary rounds and other fundraising events are generally only open to ultra large institutions, and they aren't really interested in having individuals on their cap table unless they're billionaires or they're investing $50 million a piece. So there's kind of a necessity element where an individual just isn't going to get access directly on the cap table, at least in a primary. Now, for some secondary deals where the company does allow free market trading on the secondary market, an individual may be able to purchase shares from an existing shareholder. And if the company allows it, they may be able to buy directly on the cap table. But that would be in a secondary from an existing shareholder versus a primary. If the company allows it, that's usually a great option. When you're doing a secondary transaction through a direct transfer where the company allows it, that does add a process of company approval. Now, when you would choose to invest in an SPV rather than direct is really when that company doesn't permit direct transfers. Seeing an opportunity from a venture capital fund that may have originally purchased the shares through a vehicle. And so perhaps that's where the shares already sit. So for whatever reason it's come about, typically an SPV deal is where investors are being pooled together so that the group may have much more buying power and be 5 million or 10 million or larger size. And so they can access some of those institutional size deals by investing together as a block.